Okay, good morning, everyone. Mic check. Can everyone hear me just fine? Okay, I'm going to assume we're good to go. Give me 1 second here. There we go. Okay, let's get rolling. So good morning, everybody. All the charts have been posted both on StockTwits, Twitter, and on the Slack channel. And let's jump into first let's jump into what's going on overnight, and then we'll kind of roll from there. So let me pull up the 5-minute charts, and we will see what is happening. So here's CL. This is the overnight. I believe I have the overnight on there. I do. And along with today's levels, and you can see that really it's been pretty much a grind all night long. Everyone's on hold for oil inventories. I want to show you something here. Interesting how that picture changes when you expand it out a bit. So this is where I was trying to short yesterday afternoon, right up here in the 62 level. It just wouldn't break. It obviously rolled down 100 ticks from that level. I'm good with working a location when I think I can get it to roll. What I wanted to show y'all is, and again, this is aimed towards the people in the room, but when we look at CL from this perspective, so there's two things I wanted to show y'all on that. Let's minimize that. And let's look at this. So first I wanted to go to where in the world? That's not very helpful. There it is. CL 5 minutes. I had one other chart. Oh, there we are. So on this, this is a 15 tick look at it, and you can just see all the divergence we had both. So this was the last big wave from a 15 tick range, right? See that? That's the base of the range. And I don't think we've still have not broken that. We have still not broken the base of this wave, but that becomes pretty important there. If we get underneath this level, so I'm going to change this here real quick. That's the first bar. So if we get underneath this, you can see how that's held support all night long. But getting underneath that 61 level really opens this up to move to the downside. And you can see the delta divergence that we had going into the high, which is why I wanted that short so badly. And I just couldn't get it hooked up yesterday afternoon where I could really make it stretch really hard to the downside till right at the end of the day. You'd have to been extremely patient on that, right? So that translates, you drag that over into this over here, right? We had you can see the same divergence right up there at the high. See how much patience you would have had to have. That's on a 7 range bar. How much patience you would have had to finally get that roll to the downside. So the setup was correct, but that's why you need, so the important lesson there, that's why you actually need rotations to make the trades work, or you can just get hung up in one little area. So frustrating when the market does that. Good that we had the right read, right? So for today, looking at the CL profile, let me do that really quick. Oh, you know what? You can't see what I was pointing to, can you? Because I was on the wrong screen. I'm going to draw this back. I apologize. Okay. This is what I was talking about. I'm so sorry. See the divergence we had on the MAC? That's modified MACD is what that is. But you can see we clearly had divergence going into the highs. You can see the shifts down. See how, okay, so there's one other thing I'm going to point out. See how this right here? So that is the algo pointing out where the last energy expansions were, here and here, right? Then you had your fractal with a speed bar set up. But see, once we got underneath, these two bars were pretty much in the same place here. Let me erase all this. These two bars were pretty much lining up in the same location. See that? See, see how once we closed underneath, that's what allowed the roll to the downside. But it took forever, and that's a 15 range bar, right? So the other things that were going on there, I just want everyone to see it. There's clear divergence up into the highs, right? And that was a key. That 62 level was a key level off the profile, right? So that translates. Wow, I gotta love it when the computer does that. Where did this go? There we are. There we are. So when you translate that, I may have too many computer screens on this computer. Left, right. How about now, Joyce? Am I all right? Can you hear me? Okay. Yeah, there was an audio issue there. Okay, I apologize. What I was trying to point out, let's try this one more time. Wow, I hate when we have audio issues, but we'll fix it. What I was trying to point out was from yesterday. See on this big 15 range bar, it's a large bar. See the divergence on top? It just wouldn't let go. It finally did let go and it was worth 100 ticks. We were trying to short that 61.90 yesterday. All I'm trying to point out there is that by the time they actually let that thing go and roll to the downside, took forever, right? And then here, 7 range. So that by the time, so what that translated to was this. I'm missing a chart. Hold on one second. There we go. So what that translates to, right, when you're looking for the setup, see the divergence on the modified MACD there, right? Can you, everyone, hold on for just 1 second, please. Hello? Okay, I was wondering, it's like, I'm alone in this place and I hear bags being moved around. So my dog managed to get herself stuck. So she's unstuck now. So what I was pointing out, as you can see here, you can see the divergence coming up on top. You can see this is the largest wave up right here, right? But see this choppiness here? If you're trying to trade in that, it's hard. So it did give the roll to the downside, but you just had to sit in this to make it go, right? And it just took forever. That's just all there is to it. And that's a disadvantage of having a market that starts to grind. You could have the right setup and still not get it to release. There's nothing else to say on that. But it was a good setup. You just had to be willing to hold it overnight, which I'm not, by the way. So that's the end of that story. So next, let's jump in. I'm pretty sure we have something to do with Italy's elections going this morning. I'm sure something. I don't watch the news because I don't care about it. but I know someone's already texted me, so I know it has to be something going on. Let's see what they're having to say. Maybe not. Trouble with Iran. Got it. So that's what's causing the market to do whatever it's doing, or that's the excuse for doing whatever it is it's doing. So let's just jump in and look at the profile real quick on CL. You can see we're just still in this huge balance area. I want to use this chart. Guys, I apologize. I'm obviously not as on as I want to be this morning. Let's see. There we go. It's a better one to look at. Thank you. Oh, I know what I'm missing too. There we go. 1, 2, 3, 4. It's the oddest feature that this thing does. File, save all. Okay, so when you look at the CL profile, we're just stuck in balance. Look at that. That's here. There we go. We're just stuck in a massive balance area. That gets harder and harder to trade. That's like what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's building a lot of energy for probably a pretty sizable move. I don't know which way that move is going. It's interesting that there's some kind of problem with Iran and oil's going down, but whatever. Bottom line is the longer it stays sideways like this, the harder it gets to trade. And then if you look at yesterday, remember I said the characteristic of having wide-ranging days is you usually end up with an inside day where we just fill in volume. And that's exactly what happened yesterday, which is another reason why it was so choppy, was we were stuck in this huge range from the prior day. So hopefully it clears up a little bit today and we have some better trading opportunities, or at least the setups will work with more of a snap than they did yesterday, because that really sucks when you get days like that, days like this, right? They just grind on you and you're just pretty much having to scalp in and out. And then you just get one massive day, right? But that massive day is literally, indeed, what it did was just sweep the range from the whole prior session, right? There's just not a lot to do with that, right? It's just stuck in one area. And even though this is a day where it covers 200 ticks of range, but we don't clear anything and we don't fail anything, and then we're just stuck in the middle. So I don't know what conclusion you draw from that, other than we're in balance, and defer to the intraday chart over the day time frame chart. Key levels are still working there from prior sessions, but it's becoming a chop fest more and more. And that's what leads to that super slow grind that you see on the 15 range chart, where it's just one bar floating over the other bar, right? So anyways, that's CL. Let's go look at NQ real quick, and then we'll do ES. So here's the NQ profile. I've already posted the levels, right? So you can see we've actually had quite the nasty rundown. So two things about that. The next time you're in a market, right, where you go, how am I going to make any money as a day trader? Because we're just getting all of this right through here, and there's no rotation and nothing else going on. Just know I've never seen one example where this continues for a year, ever. I've seen it go for an entire month. I've seen it go for almost 2 months before, but I've never seen it where it doesn't open up into these ranges like this. And the other side is true. I've never seen it where it opens up wide like this and doesn't come back to doing this as well and grinding up. And your job as a day trader is to figure out which one of those two we're in. Slow grind. So slow grind is nice because you can just buy, you look for the dip, you buy it, and you let it run up, right? Big grind, big roll is you can trade both sides of these markets and usually get pretty nice profits, right? So the key area here, the key things I want to keep up with, right, so when I come back and look at this, is what's above and what's below and where are my swings. So when I look at that chart and I just eyeball it, that's all I do. But two things occur. This looks like my last meaningful swing low to me, right? And that was back in early March. So when I look at that, what I want to know is from that low, right, to this high, where's the 50-60? Why is this computer running so slow today? And you'll see that part of the reason why we're getting absorption here is that 50-60 goes from here. we are right in that 50-60. If we don't break below that swing low there, that 7,300, right? The other natural thing to expect would be that we're going to come back and test from this side. Now, if it gets underneath 7,300, different ball game, right? But the level sitting above that I would think we would test by hook or crook, doesn't have to, but you'd think is that 7,600 to 7,650 is the natural target up. And that's a nice rotation to the upside, right? We're sitting at 73.58, 75 right now. So that's almost a 300 points worth of NQ. That's, let's see, every 100 points is 2K. That's 6K on one contract if you can figure out how to swing that from low to high, right? And you can see we stopped literally, right? We came literally right behind the 62 retrace of this area. Do I have this marked correctly? I don't think I do. Hold on one second here. Let's do this. I may have done it wrong, guys. Apologies. Oh, there we are. 15. 60. There we are. Came right to the 62 retrace. You either trap behind that 62 retrace, so you have two key support levels, one at 72.37, one at 71.83. Either trap back in and push, or test and hold the 7,300 for a push back. And then the other side of that formula is this right here. You know, it's pretty fun. I actually wanted to get all the charts done, and I'm still running behind, but that's all right. And then this makes the logical backside test area. But there's no obligation that the market actually do that, but that's a logical test back up, right? And then you use the intraday setups to see if we can't get entry. I want to do something here real quick. So if I switch off of this, and I look at this. Okay, so see how we have those two huge waves there? I'm going to erase all the lines so it's clean. Okay. So this is my last major push down, right? I want to watch those. The first thing I want to ask is how big a wave to the downside is that actually? So let's go look, right? Okay. My biggest down wave came back over here on Monday the 13th, right? 513. Okay, that's my bellwether, okay? Because I don't want to get lost in this. So, number one, you will see that once we got above this wave, you can see pretty clearly. Look at the rotation to the upside. Notice that this wave and this wave was equal. The only difference is this wave came off the top. Once we got underneath, I gave the extension to the downside. This wave was not at the bottom, right? See how we actually diverged when we pushed into the low? You can see the delta divergence as we pushed into the low over here to the left. But once we got above it, see you. And that almost looks like the Friday setup, but it wasn't, right? And let me see something here real quick. Just do this to make sure we have a fair representation of the days behind. There we go. Still think it'll look the same. One more. And there's our last big down day. And again, you can see once we got above that, right? So for today, right, a couple things are important. This is the biggest push down overnight. So I know two things about that push down. Number one, I expect once we're underneath that, first time up into that area, that will serve as resistance. So it's 74.12 all the way to the top of this wave, which I'm just eyeballing, 74.45. That's what we have to get above. It's the biggest wave down overnight. If you get above the 74.45, I would expect a short squeeze to the upside. Now, the last wave down is also important to me. That comes right here. That's the top of that wave. This is the bottom of the wave, right? Let me expand that out. Okay. Top of the wave. So from 73.81, you probably have a pretty straight up run from somewhere between 74.12 to 74.45, and then we'll restart. The other area that's important, obviously, is the mid of the biggest push down. So this area becomes pretty juicy for rejection first time in, which looks like it's about 74.30, right? So a couple of things. I've got to get above the bottom of this wave, start pushing, right? I'm getting delta divergence into the low. Why do I know that? Because I can freaking see it, right? We pushed a new low. We were unable to break. Now, the mid of that wave, so I'm going to construct it here as I'm going along, right? And I'm not trying to make a million decisions. I'm trying to make a few good trading decisions. There's the mid of that wave. If I can get above the mid of the wave, right? If I can get above 73.81, I would expect a backside test towards that 73.70. Again, I'm ballparking it, right? And I'm going to let the algos trigger me into the trade. Everyone knows I'm looking for a fractal, shift up, speed bar fractal, shift up, some combination thereof, right? But I would expect first time into that 73.70 that we get rejection out of there. I'm not trading. Oh, we haven't opened up yet, but I'm still not trading the first couple of minutes of the day or even the first 30 minutes. And by the way, we have FOMC member speaking right now. I don't know how to say his or her last name. It's Quarles, I believe. Speaking right now, it's 8:30, 9 a.m. business inventories and housing market index. Those are medium of importance. And then 9:30 oil inventories. That is it. That is it. Okay. And so the whole point of that is, so we should reject right out of here, right on the open. My guess is we reject out of that little area right there on NQ. What I'm interested in is getting above this wave and then getting a backside test into this area and finding long triggers off the algo for pushes back to the upside. Okay, so that's my 2 cents. You can also see as we're pushing new lows, we had divergence here. So I'm not exactly sure I want to be short. I don't like shorting into where we've already had divergences, right? And we're opening right into that anomaly. So remember, this is all overnight, but this area still should serve as some type of resistance. Now, if we get above 70, if we get above that resistance area to 73.81 and we backside test this area, my guess is you get responsive buyers for a push to the upside. And this bar is very normal that we just got, that rejection. You can almost tell perfectly where it's coming from. It makes total sense that they would have rejected out of that area first time in. So anyways, that's my 2 cents on NQ. We've got to get above this wave or find a new wave below to get above and restart the process. And like I said, if you're aggressive, that was a nice area. You could have picked off almost 10 points right out of the gate, I think. Maybe didn't quite push 73.60, but it got damn close, right? Getting above that, right, and getting above 73.81 with a close above, first time you push back down into this area, I'd expect just the opposite, responsive buyers and a push to the upside. That's assuming we don't open drive higher or open drive lower. So that being said, let's minimize this. And look at that, they drove right over. So see how that worked? Rejection, push in, rejection, speed bar, fractal, shift up. We all know that's a good sign, right? Out of what was significant divergence into the lows, right? So now, again, if I was uber aggressive, I'd be sitting right here like at 73.73 with a 10-point stop, right? And attempting to catch the, what the heck is that? Thank you. So I'd be sitting right here like at 73.73 with a 10-point stop. If I was uber aggressive, attempting to catch the long off the backside test of this, even though we haven't closed above yet, getting above the mid and knowing that we're gapping down, that's good enough location for me to get pretty damn aggressive to the upside. And if I think we're going to push up, I'm willing to take the loss there. As it stands, I'm not, right? I'm not willing to take that loss. So there's nothing for me to do. Now that I mention it, maybe I am. So see how we just popped right into 73.73? And now all you'd want to do is put a 10-point stop on that and hope that it works. Right? That's literally what you're doing. There's no way to read the order flow the first 10 seconds of the day, right? You simply want this level to hold on the backside test, right, for the push to the upside. And you have no idea whether they'll long liquidate it or not. Literally none, right? So the only option to that is either put a 5 or 10-point stop in there. And the only way you can figure that out is through experience, right? as to which stop is appropriate. And then the other challenges trading right off the open is how fast are you going to trade? And you also need a flip on the oscillator over here, which we haven't gotten yet, right? So you have the speed bar, but you don't have the flip yet. And obviously the first 3 minutes of the day are challenging anyways. But like I said, I think that's a good location to catch the rip to the upside if you're looking for location and you're willing to take the punishment of trading the first 30 minutes if you're wrong, right? So anyways, it's my 2 cents about that. I don't encourage people to trade the first 30 minutes of the day because I think it's very, very difficult. Okay, that being said, let's shift to part B over here, which is, see, we don't need this. Let's go look at ES. That looks like the ES I don't want to use. I'm watching for this to flip right here, by the way. As soon as that flips positive, you have a great chance to run. See how you could have used that area? I mean, that's really just picture perfect. I can't draw that up any better. As an area, it's acting for support. And if you take that, you almost have 10 points in that trade already. It traded to 73.84, 75, right? Or 73.84 from 73. And now what you can do is you scale, right? So you can bust out your 10 for half, right? And now you can just trail up because we're very likely to get an open drive higher off of that, quite frankly. So at any rate, that's pretty much picture perfect what you're looking for on any setup through the course of the day. I can't draw that any better than that. That's perfect. So minus the happening in the first 3 minutes of the day deal. So let's go to the next part, right? And let's do ES. Damn, that's ES profile. Which one did I use for yesterday? I clearly didn't use this one. So yeah, that's not right at all. So let's just do this. Here we go. Okay. First of all, take a look at ES, right? We've moved down. It hasn't been a disaster, right? Look at the big picture, okay? Clearly, structure right here to the left. Clearly, the swing low, the most recent swing low that I would measure off of, right? So I'm going to do the same thing I did with it with NQ. We're right in the 50-60 of things from that whole swing down, right? It makes sense that people are looking to buy in this area to begin with, right? So then the other natural question I have is, you not have it written in your notes. That's my upside target, 2880 to 2900. Makes sense that we go up and trade there, right? It's 60 points to 80 points away on ES. That's a good trade, right? If you're swinging, think about it. If you're a swing trader, I know we're day traders, but if you're a swing trader, you're looking at this going, okay, we have some kind of negative news. We've gapped down, but have we gapped down below the 2800 that we were at the other day? We haven't, right? So to me, that's always a good entry location, right? So think about that. We have bad news. We're already down. If it was really bad news, wouldn't we be gapping below the prior swing low? Wouldn't people be selling it pre-market into the open? Instead, what have they done? They've come in and bought it right out of the gate, right? And they're pushing up. What's the hurdle? This little area right in here, yesterday's consolidation point, and then this entire chart. See how thin? So look at all your profiles, right? Just step back for a second. Pause. Look at all the profiles when they look relatively healthy. See how they're built nice and fat? See this thing right here? That's a POS, right? Meaning piece of shit. That whole thing needs to get repaired. The whole thing from top to bottom needs to be repaired. What that ends up looking like, see here where this whole area looks like crap over here back on the 23rd, I think, right? See how we came in and filled in almost all the volume until we completely repaired it. And once we completely repaired it, they tested a little below, right? And then they popped back up. All of that got fixed. See this? See how all of this got fixed? So this was a double whammy. This led into this, one poorly auctioned area to another poorly auctioned area until it finally got fixed here. And once it was done, you'll notice the second time through that area, they were able to break it down. See this area right in here? If you highlight it, what you're going to see is we crisscross that area multiple times. You know why? There's no volume in here. And what we are doing here, here, and here is we are filling in the volume that never existed from that gap. That's what's going on in this area, right? So when you look up, right, this is clearly what needs to be fixed up. And when you look down, this is what needs to be fixed. Damn, really that whole profile, this whole thing, that whole area is begging to get fixed. Now, do we get below the 62 retrace to fix it? And is there any obligation to fix it? Nope. I just know that once we get into this area, we're repairing the chart. And I can see if I look a little bit further back to the left, right, that we actually are pretty thin right up until here. It's actually this whole thing. And then, so from that 2784 down to that 2750 area, that whole thing needs to be repaired. Once it gets done, odds are, so we've repaired this, or we're in the process of repairing this, right? There was not much to repair here, but you're into a 50-60, which is a natural place to get a responsive buy. And if we slip underneath this, then this is what needs to be fixed next. And you'll notice, by the way, within here, there's only one naked point of control at 2780. So really the key is to get underneath that 2783 to 80 area, right? And then it has free room to range. And then you'll notice the next naked point of control from both the TPO and the volume profile is at 2733 to 2730. And that would become a natural target down if we get underneath 2780. And I would expect a responsive buy from this area the first time, right? The key is, can it get back over the 62 retrace and trap, or does it respond, then slip underneath? That becomes resistance. That then opens us up to come down and test that 2733 location on the bottom, right? And then there's also an untested open gap right there for all the retail traders at 2750. It's a nice round number. And my guess is that also gets a response at that 2750 area first time in as well. So that's my look at ES. If I had to guess, my guess would be is they're going to try to press people into this low, fail, and come up and test that 2880 over the next couple of days. Why? A, we've already corrected down from 2960 to 2800. It's a good rotation down, right? So this is not doing any fundamental analysis, just my general experience. When markets press down, they tend to like to do a 50 retrace. And then you'll notice this was a gap away from that whole range before we continued higher. But you will notice, right, and even getting out of this year, right, you'll notice that when we tend to push down, we tend to make pretty decent counter rotations back up, even through here, 1, 2, 3, 4, 5, 6, 7 days, significant counter rotation back up. That was actually the low, right? If you go a little further back, right, where we're actually in a bear market, right? See here where we're pressing down pretty hard, and we still tend to counter rotate back in and try to repair at least to the mid of a poorly auctioned area before continuing. And then again, really 1, 2, 3, 4, 5, 6, 7, 8, and significant counter rotation. It's just hard to maintain the momentum on ES and NQ to the downside without getting the significant counter rotation. So obviously I'm just counting days, and there's nothing significant about that, other than if you keep counting all those days going all the way back to when I started trading in the early 90s, right? It worked the same way. So 1, 2, 3, 4, 5, 6, 7, 8. I really don't want to be Mr. Uber bearish 8th day down in a rotation lower, because I know we're likely to retrace back to that 50 retrace, and I don't want to get my ass kicked pressing a short for maybe one more extra day, right? And then have it come and rip against me and rip all my profits away. Not what I want to accomplish, right? And you'll also notice, look how few days. We've had one day where we closed on the low, and that was on the 10th. Every other day from rotations down, all the closes have been at mid to that top. So yeah, I'm looking to buy dips. That is what that translates into. right? So, and then that translates one other place. Let's get rid of this. When I look at, get rid of this, and let's put this. Okay, so when I look at this, right, number one, into the low, clear divergence, delta divergence, right? I can see it through here. Last wave down. So what do I want to do? Same thing I want to do on ES. By the way, this is the opening balance of the first 30 seconds is what you're looking at here. So when I look at this, I go like this. Bottom of wave, top of wave, right here. We've only gotten one bar above the top of that wave, and it's a hammer, which I hate those. They fail a lot, right? The mid of that rotation down. Right on the opening range, right? See that? So see how we've gotten above? So notice what it's doing, right? In here, and ES is a little sloppier, but notice what it's doing. We've attempted above. We did get a point of control right above. They backside tested, and instead of just using the 50-60, they've used the 50-60 and the opening range as support, right? What do I actually want to see? I actually want to see a full green bar close above this 28, 22 and 3/4. So I want a whole bar, a bar that looks like this bar, an example, bar that looks like this, right? It's a full green bar. Like, I know it's gray. I make my bars gray instead of green, but I want a whole bar closing above 28, 22.75. And I'd like to test back over here. This is fantasy trading, right? Just like on NQ. Then I'd like to test back in, get the green bar up here, test back in. And if we get a flip when this occurs, like we're about to right here, right? So see how this bar is probably going to print right here, right? You're going to get a flip. I want this, and then I want the test back in, and then I want to close out if I get underneath that fractal. It's exactly how I want to run that trade, right? But all that has to line out first, right? All that has to line out and actually happen first. So see how they haven't been able to actually been able to get that to occur. So now, but what I do have here is I have a fractal shift up, right, which is bullish, right? And we're coming back in. So this is how I would run that trade. Again, you're right at 8:45 and it's hard, but this is exactly how I'd run it. We're going to run into news here in a little bit, but I would take that long right here, 28.23 half. I put the other half at 28.21. That was going to give me an average at 28.22 with a 4-point stop, right? Or you can simply put it if it closes behind that 28.20. But that's exactly how I'd run that trade for a push to the upside. I'm not going to take it. It's too close to news, 15 minutes till. So anyway, but that's your location for a push to the upside. And that's basically what we're looking for through the course of the day. And I don't want to short until I push up into key levels. The other part I want to remind everyone of, this stuff is so tiny that we're looking at, right? That you need to make sure that you are coming back, right? And you have this 5-minute chart up and running, right? So what are we looking at? What's going on here is an attempt to trade into prior day's low. We came right off the anomaly, right? 28.15 to 28.11.50 was the support area. So we opened up, tested down into it, right? We've trapped back in, and now they're trying to, what's the natural target, right? Everyone's going to be shooting for this gap fill, but they can make it work. And now you've gone from this level. So 28.34 is your clear upside target from here, right? And what have you done? You've come in over here. You've taken the larger day time frame support resistance areas, and you've knocked that back all the way back to these little tiny bars, right? To get your setup, which was fractal shift up after big oscillator divergence plus delta divergence, right? We didn't get the close above till right here. So that's really the first clear green bar with a point of control above. But what you did get was speed bar, fractal, shift up, flip on the oscillator. Everyone in the room knows what I'm talking about. I'm not going to define that for YouTube. If you're interested, contact me for coaching. I'll help you. And as I said, well, the way I would have handled that is 28. My entry would have been on this bar right here, right? So that 28.23, and that actually was a down bar. So you actually would have ended up at 28.22. And then the other side of that would have been an attempt to get in at 28.21. So you actually would have ended up at 21.50, right, with a 4-point stop, or a hard stop just if you visually see it close behind this point of control. And now, just like on NQ, you extend it to the upside. And if you look at NQ now, we're trading at 74.05. So I want to go back and show that other trade, right? So if you look at NQ, it was the exact same picture, right? So here's where I'm drawing. Here's our divergence from both the oscillator and from the delta waves, right? Here's our last wave down. I have it pictured right here. Here's the mid of that wave, right? And here is where I said, hey, you get backside tested, even though we didn't close above, right? So I didn't have everything I wanted in this particular case, right? So if you look how that would have played out, I was willing to take the loss. Normally I'd be willing to take the loss right there, right? You just have to figure out if you can trade in the first half hour, right? But you're on big divergence. That speed bar fractal shift up, right? Test back into that 73 area. So out of that test in, right? Notice it doesn't trade one tick behind the 50-60 of this wave down, right? That was really critical. So I'm usually willing to speculate on that. Everyone has seen me take wins and stops off of that, right? But what you know is you have a gap down that hasn't broken the swing low, which is really important off the 5-minute chart, right? And off the TPO. And now what's happened? So this is actually your first full close above this wave to the left, right? So now you're faced with a challenge. Here's the flip right here. That's the flip on that bar. This is your close above. That's the flip on the bar. And now what you don't want is a close behind that fractal speed bar back over here. The problem is if you took that entry at 73.85, you're talking about a 15-point stop at that point, right? So sometimes you have to be a little bit more aggressive on that entry so that you don't end up getting kibosh. So from that 73.73, you've run all the way up to 7,400. Like, shit, most people can just pack it up at that point. That's a good trading day for a lot of people, right? That's about 73.73 to 74.03. That's 30 points, $600 a contract in 20 minutes, right? Like a lot of people can just go, hey, I'm hitting the whatever you hit at 8:30 in the morning because the day's over for them, okay? And so that's essentially the setup we're looking for in every single market. What's the difference between today and yesterday? The market's moving. That's it. Yesterday, the market was just in grind mode. And so I get in this debate constantly with some people about, well, yes, but the setup, right? Or, but it makes sense, or, but I should hold forever. The place I trade well is when markets are doing this, okay? Entry, exit, stop. The market moves fast. I don't have to sit and think about it for a long time. I can scale, let trailers work. This is my ideal situation. Unfortunately, all those situations lately, meaning the last 3 months, the majority of days, have all been coming between 8:30 and 9 o'clock. And the problem I have with that is I have a large history of losing trades in that area that really screw my day. And I don't like trading in that time frame. That's me. The setups actually work. I just don't trade that area. I don't just trade that time frame extremely well. Like, the numbers don't lie. Some days I get it right. Some days I get it wrong. And Daisy's chiming in. See if we can get her down here. Daisy. Good girl. Come here. Come on. Sit. Good girl. You're going to hang out with me for a little bit. So there's no barking. Okay? But you did a good job. Here. Let me get put out of bed. Okay? And just a second. My office is still in faster area, but here. There you go. Lie down. Good girl. Okay. So long story short, long story short, that is what I am looking for through the course of the day. Again, look at all the pieces. Oscillator divergence, right? We got over the wave, we got to over the mid of this wave, and then because I thought we would move higher, aggressively take the backside test of that if you're willing to take the stop at 8:33 in the morning, right? And then let it rotate all the way up for you and know that it's going to come back on you a little bit, right? So I want to point something out because it throws people on the oscillator, right? So mentally, how do you weight this, right? Because you're like, oh, there's a cross. You'll notice I'm not so hung up on the crosses that they mean that much. I like it to be crossed down, right? But I want to show you the order in which it's weighted. The order in which it's weighted is this. It is I can find the chart. Okay. The way in which this is weighted is the yellow zones, number one, are the most important. So this is resistance. It made a natural target back up. I forgot to mention the gap fill. We might exceed this a little bit because of the gap fill, but that's a resistance location. It made a natural target to look for a resistance area, right? So this chart is number one, right? Secondly, we gapped down, right, from yesterday. We weren't able to even the gap down, if the news was so bad, we couldn't test the swing low from this week, much less break the low from this week, right? That's bullish, not bearish. You've trapped all the inventory short overnight. And these guys are screwed, right? If they didn't get an open drive lower, they were toast. And that's why we're driving up as we are right now, right? Next what gets weighted. The divergence over here means a lot to me, okay? The divergence over there means a lot to me because I know that when we get those divergences and they drive hard down like this into a divergence, that you're trapping a lot of shorts. Just like I didn't know, but I had a pretty good idea. CL, we were trapping a lot of buyers yesterday, right? Then lastly, this is the last push down, right? So here's the top of that wave, right? This cross is coming at the top of that wave. What do I know about that wave? It's likely to get backside tested, right? So this is important because if you put all your focus, right, if you just narrow your focus all into that cross right there, you're going to try and short that, right? And that is a negatory, right? This is either you got to get back underneath here to short, you need another big wave up and get underneath it, right? So 5-minute chart, top of the list. Number two, divergences. Number three, waves, and those are interchangeable, right? The waves, right? Number four is the fractal speed bar, shift up or shift down, right? Then the flip up or down on the oscillator, I'm referring to these little yellow bars, right? After all that, the flip is very important to me. And then last, the cross is last. As a matter of fact, the cross on those little purple and green lines had the least amount of meaning to me of all. I'm saying this because I've had probably 3 people that I've spoken to who have come out of trades because we'll get a cross on this, and it is incorrect. My suggestion would be you throw that concept and take it and cross it up and throw it into the garbage can completely, 100%. Doesn't even happen as far as I'm concerned. If I'm in a trade and I get this, it means absolute. If I'm already in the trade and I've got all these other pieces, it means zero to me. It is not a reason. I got to stress this. It is not a reason to get out of a trade or get into a trade. Neither one. It is a weather vane at best. Like, you know, the little airports where you see the little wind thing blowing and it shows you which way. That's it at best, right? This gives me a lot more information than this. And even within this process, right, I know once I get above, so this is really important. I know once I get above this wave, right, I know it's going to get backside tested. So you can't look at it and go, well, it flipped to the downside, so I bailed on the trade. You can't you can do whatever you want actually. But, right, look at the other pieces. Have you closed? So here's your next wave up right here, right? So what I'd be going is, can we close underneath this wave to start with, right? Number two, do we get below the mid of this wave? Because this is clearly your kingmaker right now. And if you look at that same concept overnight, right? Here's your last wave. Here's your cross up, right? Right over here, that's your cross to the upside. Let's say hypothetically, you wanted to be short, but then he said, well, I'm not going to short because it crossed up. Well, if you look, here's the mid of that down wave. Right into the mid of that down wave, right? Where you're looking, that's where you are looking for the location for continuation. So let's say hypothetically, so we didn't close underneath this wave yet. Notice we came right to the bottom, right? That big wave down, and we just came back and tested the mid. But now we've closed underneath. See when we closed underneath here? So let's say whatever case you were looking at, let's say you either shorted here, or you shorted here, or you were looking to short over here. Well, in all those cases, right, if you were short from up here, right, you cross again right over here, right? You would have ended up covering that trade right before it made the roll down into the lows. You don't want to do that, right? So I'm trying to tell everybody, right, that the cross by itself is inconsequential. The other thing I'm trying to tell everyone that's also important, if you look at that, see how we had divergence into this low over here? You can clearly see it, right? Okay, so what you are gauging there, so at this point, you don't know that it's not going to roll up or roll down, right? But now you have another wave right here. See this? Okay, now I'm going to do the same thing on that wave. Unless I get above the mid of this wave right here, even if I'm getting divergence, I'm not going to look to get long. So think about that. So each little piece you're putting together, right? So you have divergence. That's great. What's the next thing I want? I want to get above the mid at minimum of the last big wave down. Now you could argue right here that we got above the mid of this wave. And I'd say two things to you about that. A, it's true, you got above the mid of this wave on this cross. But if you look at these three things, right, see how all three of those waves are all basically stacked on top of one another. You could basically make the argument that this whole thing is one massive big wave from here to here. Why? Because literally if you clear this wave, you're going to get stuck on this wave. And if you clear this wave, you're going to get stuck on this wave. So the natural thing to do on that would be to block all three of those off from here to here, right? And go, you know, things have changed when you get above this point right there. That 74.20 to 74.30 is the mid of all that sell pressure, right? And my guess would be that is where we're going to head for a test, right, at some point today, right? Or whenever, a better stated, whenever we get into there, I would expect a rejection out of that mid. And additionally, right, which is important, additionally, what does that line up with? Well, if I look at that 74.20 area and I bring this chart up over here, is that correct? 74.20? Yes. And that lines up with almost the settle price from yesterday, right? So now all that starts to make more sense. And if we look off to the right, there we go. I was like, hey, it didn't push. There we are. Now we've pushed into the mid, rejection of the mid of that entire set of three waves. So if you want to speculate, that's a good place to speculate without a setup. Now you have a fractal, you have no shift down. And now we go do the same thing. Number one, do we have divergence into the high? We do from the oscillator. You can see that's that. That's up. Number two, we clearly have divergence here. So now I've got to get underneath something. So number one, that's my biggest push to the upside right there. See how I'm constantly going to be redrawing the charts. So if I look at that push, I know I've got to get below the mid of this push right here in order to go lower. Right? So I can reorient myself on that chart the whole way through. Next, 73.90 probably gets a response. First time in, right? And then next, do I get a flip or a fractal or some type of setup where I want this red arrow shift down and a flip to the downside, right? And you can see over here, see how we got above this wave and we tested back to the mid for continuation. That's a normal trade setup when you have decent rotation. That's a normal trade setup, right? So at any rate, long story short, you already made your day. If you're long from 73.73, you've gotten a 50-point trade off of that. Essentially, it's $1,000 a contract. I don't know that you can do much better day trading a million times and doing that better than that. So at any rate, I think I covered all three pretty good. Does anyone have any questions over that? Does everyone understand that? Because that's how you do it, guys. And again, notice nothing came up about a cross anywhere in here. So my suggestion to you, for anyone who's having issues with that, is if this is throwing you off, all you're using these little purple and green lines for is divergence, and that's it. That's all you should give a shit about on that. A cross means jack. On a 0 to 10, it's a 0.1, 10 being the best, right? I want to say it again. 0 to 10, it's a 0.1. I don't give a shit about the cross. People who try to trade crosses that's a variation on a MACD, is people who trade crosses on that get their ass kicked. Don't do it to yourself, right? So again, see that 74.25 right there, right? I'd be willing to short that with a 10-point stop, right? For a counter rotation back down. So if I'm aggressive, right, come in here. So here or if I can get over to it. There, I sold half a position at 1950, right? So that's being aggressive, right? All I'm betting on is we're not going to get above this level, which is whatever that is. Let's see. 74.26. So I'm going to short that 19 with a 30 stop. See that? I literally just shorted into there. There's the roll to the downside, right? I'm short 1950. Now I have a fractal, no shift lower, but I do have divergence, right? And I'm willing to stay in that, right? I'm willing to stay in that trade as long as it doesn't get above. Now I'm looking for the rest of the pieces to come in there. So what do I need? I already know I have this wave back over here that I want to test into, right? And then I need to get underneath at minimum this 3 across, and I need a shift down, right? So as you can see, I don't have all the pieces. So I'm guessing here, right? I'm just looking and going, that's a logical place to get rejection out of. It's the mid of that big wave, right? So a couple of things could happen. They could test above and fail, which would mean I would get stopped on that if I didn't scale that right there, which I didn't, by the way, right? It could mean that there's all kinds of variations on this. Get above, fail, get back underneath, backside test, fail, outright fail, right? But I know this for sure. I got to get underneath this little level right here to make any progress to the downside. This is the bottom of that wave. That's the last shift up, and I need to close underneath this. So I need a POC underneath this shift up, right? And preferably a shift down. And so I do have the oscillator flipping right here, which is a good sign, right? Now that's what I need right there. If I can get that little red arrow to get produced, that would be very, very good. And now I would actually have a pretty damn good chance of having a good extension to the downside. Right now I got nothing except hope that that level holds because there's no other setup there yet. And the mid of this wave is also important, but it's only 3 bars. So really this is my last 4-bar push-up. And I'm going to have to get underneath the mid of that wave to make any progress to the downside, if there is any. So that's my next area of challenge. Right? And sometimes it all sets up so that it's just pretty imperfect. And now I'd have to decide, for example, my fill was 74.1950. Do I take 74.14? So now I've got this. What I would do now is I've got a fractal, delayed shift down, and a flip, right? And I know I've got to get underneath this wave. So I've got a choice. I can either cover half here for 74.11, right? Or I can go over and I can close it, right? Or I can just say, hey, I think it's going to roll, and I'm going to hold on to this trade, right? But just realize even a test back up here would be normal because it wasn't the perfect setup. So what I'm going to do, telling the whole world, is I'm going to cover half. That one at 74.11 even, right? And I'm going to bring my stop to break even on the other half because I don't want to get my ass kicked this morning. And I was just doing this for demonstration purposes anyways, and it wasn't the perfect setup, right? I'm not underneath the last wave up. It's not bearish. And even here, really what it looks like is that the oscillator is starting to reset and just build energy for continuation lower. I'd expect more chop through here than a big roll down, right? And we didn't close underneath the wave yet. See how the POC stayed within the wave? So now I have a choice. If I'm still bearish, I could reload up on this and stop against this fractal, but I'm going to guess that they're going to come up and try to break this, be my guess. And then if it traps back in underneath, I can come back in stronger. But this is just making higher highs and higher lows. And we actually have broken the fractal trend line here, but not by much, right? They actually didn't get the POC below the trend line. So we'll see if they do that. So at any rate, I've covered half. Looks like I'll get stopped on the other half here momentarily. And that's how you do it. Any cues or questions? It's the same whether you're doing it on NQ, CL, ES, doesn't matter. It's all the same flavor. It's just how you're going to attack it. We have we have inventories for oil in 22 minutes. And I don't think I have anything else to add, guys. That's 50 points on the upside on NQ and whatever that was, 10 or 12 points on the downside from that short setup. And I still think this is going to be an area to challenge, but what I want is this to all come in one sequence, and I would short that if we could get that to set up, or one massive push. Like it'd be nice to get a wave like this all the way on top and then get underneath it. That might set up a rollover, but I just don't think we're in a bearish situation. I haven't gotten stopped yet. 1950 is the stop, so the other half of that trade still survives. Anyways, guys on YouTube, thanks for joining. I know I got off to a little bumpy start, but coffee seems to be kicking in, and I intend to make some money today. So anyways, have a great day. If you'd like to visit the room or you have any questions, tradeandperform@gmail.com. The email address is in the description of the video. If you like the video, please hit the like button. It helps me with customer service on YouTube. And I hope everyone has a great day. Talk to you later.